This is Eric Mwathe, Mwathe.com. It's August 4th, 2009, and I'm first of all gonna show you where the markets closed at yesterday. Just for the record, we have the Dow closing at 9286, the Nasdaq closing at above 2000, and the S&P closing above 1000, which is a milestone after last year and early this year's bear market sell-off. So markets have retraced a lot of the get out of my face. No. Yes. But anyway, so what's happened is market has retraced a lot of the sell-off points it had lost, and now we are back gaining back about 50% of the S&P's bear market points, and so now we are at a critical point in the market. And this video, to be very honest, is actually going to be seen by a few people because I'm only making it for a handful of my guys who are on the mentorship program. So it's gonna be a few people, handful. Now what you can do with the video is I'm gonna give it public accessibility. So if you have a friend who you think needs to watch it, feel free to share it. It's you paid for it, so do with it whatever you want, but it's gonna be exclusively for the mentorship program. And what I'm talking about here in this video is as the world market celebrate new multi-month highs, I have a word of warning for you guys out there, because to me it seems like there's a slight chance we break the March lows. And I know that's a big, I've been a bull since March, called it, that's really nothing to it. But now I'm saying there's a slight possibility we break those March lows. But to me, there's a more conservative price target, and which would bring the S&P 500, I believe, to about 800. And that would be the downside price target. In other words, from around current levels, it's gonna get very ugly, and it's gonna be fast action to the downside. If you look at it from a month-to-month perspective, day-to-day, it's always gonna be confusing. But I'll show you what I'm looking at to fully appreciate this. But it really doesn't look like you wanna be, and that's why I say keep holding to those longs, even though they are down for us in the past week, past few days. But the reason why I say no stops at all, is because I see it from a long-term picture, and you absolutely have to be short, fully exposed, and ride the wave that is coming. It's gonna probably, I'm sure most people will expect a pullback, but I think they are underestimating the severity of the downdraft, and that is where I'll spend a lot of time in this video trying to prepare you for that. Okay, now let me see whether I'll pause it for a second here, get myself going. Okay, I am back. So what I'm going to discuss here really it's going to be the theme of this video, is something that I share only with you guys on the mentorship program, and it is what I call it is really the best way I can explain it is I like to use a hospital analogy. Let's say somebody is admitted to the hospital, and what usually happens generally is, and I'm talking about the RSI here, let's say you have a stock. I'm just going to draw a line here. Let me use the right tool. Let's say you have a stock that has been bouncing off the RSI for many months, comes back, bounces here, bounce back, whatever. And at some point it breaks this support line right there. This RSI breaks support. So what happens, this typically, especially on a monthly chart, is very noticeable, but this is really where you sell. When it breaks, obviously when you break support, you sell, right? So what happens is that this area right there on the RSI, you're supposed to draw a line, because in other words, and I've explained this to some of you already, is when you break this line here, this support line, this is where I would say you are, you fell sick and you are admitted to the hospital, right? And so now you work your way, you go through the ICU, you go through rehab and all that, and then finally you try and get out of hospital. So what happens is critical. It's important to understand this part. Is you leave the hospital, but immediately, maybe the next day, you come back. What is important is this uniform action above this line, the red line. Remember, hold on. Let me change color here so we can remember. This is a very critical level because this is where you are admitted to hospital, right? And so now you came back and tried to go out of, you are trying to see whether you could, recoup at home, but you went home and you immediately realized you really had to be in the hospital for immediate care. So this uniform action above this line right here is typically a very bearish sign when it happens in a stock, because that tells you reversal, it's a rejection. And usually once you move back below this line in uniform action, the move back below what was the red line, now the green line here I'm showing, is your sell point. And that is something you're going to see over and over and over again. And so what I'm going to try and show you in this video is what happens, is what the market is telling me right now. And I'll start off by giving you an example. I just noticed this the other day, and this is Akamai, AKMI. Now, this month it's only down. It was, as of yesterday's close, was down a little bit. But what happened here is that, if I can see whether I can get the right. I'll explain it once and then we'll go through the charts. You see, we have this support line, and somewhere around here it broke that support, this right here, and this corresponds with this sell-off right there. Stock was about, I would say, for $30, maybe $40, somewhere around there, higher 30s, and it dropped all the way. It was really during the bear market. So that right there is where it was admitted in hospital. So it's worked its way back. But notice what happened last month. It tried to move above that line, and actually, if you do it correctly, you'll notice it just slightly moved above the line and is now back below the line. And this small observation, it seems small, but it's a huge understanding of how the stock market works. Because another way you can look at it is that after we broke this line, we are back testing this line. That's another way to look at it. But the key is the uniform action above the line or around the line. You can touch it, you just come close enough to where you don't move above the line. But the key is uniformity. Uniformity is what keys you in that's exactly, it's the hospital. You went home and the next day you just realized you had to go back to the hospital. So it's critical you understand that. Appreciate that, because that is really telling, and it works opposite. It works opposite. When the markets are going up, when they correct short term, they find support and they bounce. And it's just the same thing happens in reverse. And I'll save that for another time. Anyway, so this seems like a small move, but if you really look at it, I'll show you the next chart. This is Akamai. This is a monthly chart, all-time data. But look at it from a weekly perspective. Look, the stock was trading in the lower 20s and is now, as of yesterday's close, at 16. And it's because the monthly chart gave you a sell signal. And you also see the same thing. Let me spend one more minute because this is my example chart here. See this right here? It broke that line. So you can extend another line here. And you'll see as it struggled here to move above the green line, which is why it was admitted in hospital here, which corresponds to a sell-off up there in last year. The fact that it could not move above this green line here was telling of what was going to happen next. And that's why it's down. So it seems simple, it seems whatever, it makes sense, but this understanding of this is going to help you understand this video, and it's probably going to put you on notice that the next couple of weeks and months in this market are really gonna be tricky. And there's something else I need to share with you guys. Whenever you have a multi-year low, that corresponding RSI, whenever that line is broken, like right there, it's usually when you break a trend based on a multi-year low on the downside, and if you break a trend line based on a multi-year high on the way up, you get very big moves. In other words, breaking what I call a major trend. So this is a major trend support line. Once it's broken, you get huge drops, and the opposite is true. But today we are talking about markets going down, so I'll save that for another time. All right. Okay. So now let's go back and look at and I'm gonna finish off by looking at my examples and why I think the Dow, where I think they might go, and why I think that. I just share with you price targets. And even though price targets really should not be the guidance, because they're, in a way, they're really silly. The market will tell us when it changes its stripes and behavior. So for now, let's move on. If I take a look at this is now the USO. I'm going to start off with the USO, and you'll notice that the USO had been, once it moved above this blue line here in 2004, it had a nice session moving from $40 all the way to 120 eventually, and even this blue line was almost retested in 2007. So now we've come all the way back, and we are trying to move above the blue line, but we've not been able to. This is so now we are on the underside of this blue line, which is really bearish territory. But what is more important is the blue line on the RSI. Most of these charts are going to be monthly charts. We are struggling to move above this. And to me, what is more telling of what might be coming in the market here is, to be very honest, is the fact that it is struggling right there. And if it moves down, it might even be attempting to move back and trade below $30. I mean 30 on the RSI, below 30 on the RSI. And if it trades in this region, it's really gonna mean, I think, and this is also what they call a rising wedge, right? So when we break that, that's a sell signal, and I would not be surprised if at least we either retrace half of this rally here, so bring it somewhere around here, or I would not be surprised if we actually even break these lows, because you see here it never went below 30. If it goes below 30 here, it's gonna be lights out. It really is gonna be lights out. And notice, like this example here with the RSI, when it moved above 69, 68 level here, as it moved above 69, 68 level here, notice what happens. It moved the RSI from around, in 2008, from around $80 all the way to 120. So that's a serious violation. Okay, and you cannot ignore the implications of this thing moving to 30 and below. Okay, I'm gonna pause this video again for one split second. Hold on. Okay, I'm back. Okay, so now let's move on to the next test. So let's take a look at the VIX. Now the VIX is up about 2% this morning, and if okay, but that's immaterial because we're looking at monthly charts here. So what the VIX is trying to do is, you know, when the bear market started last year, it really started kicking in full speed. You notice that the VIX had moved above this blue line here on the monthly RSI. It's come all the way back and is now back testing this breakout, and seems to be finding some support on the monthly chart. Now the green line is where the VIX seems to be bouncing off, and it's right there at support. So I would say it's already trying to show like it wants to bounce. So there's some indication that the volatility might start picking up in the market in the coming weeks, if not months. Okay, so now let's go look at something else. Let's look at the SMH. Now the SMH closed. Now I see the SSG is up about, let me see, it's about 1.4%. SSG, which is opposite of this instrument. But what is more telling is that this turquoise line is where we had, once we broke, we had been finding support most of this decade. You think about it, that's a long time. And actually, you know what? Now that I extend it, let me show you something I just noticed. I'm sure now you see it. Probably not, but if I extend that line, you'll see that this has been where it was inception, support, and then we broke through that and we captured it eventually. So this area here is an important part. And remember here, we struggled, right? There was pressure there, and so we went down, right? And maybe this is the best way to explain what might happen in this stock market right now. So we tried to move above this line and we stalled. And so now we've come back here, found support early 2008, but then we broke down here. And so we've worked our way just like we did here to this level right there, right? And that, to me, given what I see in the hourly chart and everything, seems to be an area where we turn around and head lower on this instrument. But what is more critical for you guys to appreciate is what is happening here on the RSI. This instrument closed its RSI for the month of July. It ended the month of July with its RSI, I believe, at 50. Let me take that off. At 50.36. And so what that tells me is that if we just get this slight dip back below 50, that's a sell signal. Why is it a sell signal? Because it's going to do the same thing it did right there, which is right there. Okay? And that led to new lows. Now I don't know that we make new lows, but it's not entirely impossible. That's my point. It is not impossible. And so as it moves below 50 and stays below 50 for the month, what that says is we might have net a huge down month in August again. The reason why I say you stay short, yes, you might be taking short-term losses, but you cannot capitulate just as the market is turning around and starting to pay you. More importantly, for a landing perspective, is we have this trend right here that was broken right there, right? This multi-year trend. Once this was broken right there, which is right there, we had this, so we can draw a line and say this is a hospital door, the revolving doors to the hospital. And we came, and here's a perfect example of what I'm talking about. We came last year and tried to get out of hospital. We could not. We were immediately rejected, and there was uniformity in that area. We've come all the way back, and we are there again, right? And so given all that scenario, it seems to me that we head down. And so the question becomes, do we head down and find support here on this line and bounce up, or do we go all the way and retest these lows? I don't know. At some point we're going to find it. We'll find out, because the charts will tell us that things are moving around or turning around. But for now, the only thing I can say personally is you have to be short, and we will know in the future what being short means. And actually, I might need to remind myself to show you. Okay, take a look at YHOO again. This is a all-time data. Try to move above these levels here early in the month, but could not. And Vic, remember, asked you to sell it. Now that turned out to be a good. And right here you see its RSI top line's resistance cannot move above that. And more importantly, the green line here is where it fell off the bed right there. And now you see it's forming some kind of a uniform action. Remember, uniformity. This now trying to form some kind of you see, the green line is like that, and then now it's struggling, and it might eventually do a number like that. And remember, since it never went below 50 here, it will not surprise below 30. It will not surprise me if it eventually works its way here. It's gonna be trouble. Now, just on a side note, after the 1929 crash, the Dow rallied 46% in 147 days, give or take 1 or 2 days, right? In 2009, the Dow has rallied about 47% off its lows, give or take 147 days. Now, I don't believe in all these things, but you cannot really ignore them. You can't ignore them, right? So 29, that's what happened. This is what is happening in 2009. Again, 29 and 2009. You notice the nines, right? Again, the nine right there. Because we usually at the end of the decade, most decades, 85% of the time we rally. But when we don't rally, it's usually nasty. All right. But what happened after this 1929 rally is actually more important, because what happened is that the Dow would go on to fall another 85%. It lost 85% of its value after this rally. It lost 85% over the next 2-3 years. So let's keep those things in perspective, all right? Let's keep those things in perspective. I'm not saying we go there, I don't know, but I'm just sharing a side note, okay? Let's take a look at the XLF. Now, this is what happens when an instrument goes below 30. Like right here, this level, right here. On a monthly, that's risky business. You don't want to be there. And so now what is happening here is we've moved above that, and like I said, that was a buy signal. But now problem is, and this is what the market has to contend with once this market turns net negative for the month, it's not going to be beautiful. Because once this thing moves below the turquoise line, it's going to be a brand new sell-off. And I don't know how far we go, but it would not surprise me if, and it's important to note, I hope you can take time to consider what happens when an instrument cannot move above the 10-month moving average. Just like when it's finding support on the 10-month moving average, things are always nice, it's rosy, everything is perfect, yeah, it's a good time, everybody's giddy, you know. But when it's opposite, when you cannot move above the 10-month moving average, that is bear market territory. And what happens in those environments is really risky. So what I'm saying is, it will not surprise me if we break these lows. Okay? Or at least we move back 50 or 61% retracement right here from this low, because this is not a good sign, especially if the market continues. The market drops this month like I've been suspecting it would. Okay, so let's keep that. So as this thing moves back below 30 point, and I'll say as it moves below 30.90, and I might eventually explain this, but it really is a Fibonacci thing. But once it moves below this level right here, it's not gonna be a good month. And this corresponds with a break of this upward sloping support line on the monthly chart. So that's gonna be severe. This is an all-time low for the XLF right there. And once you break this, the sell-offs are usually very nasty. All right. So let's keep things in perspective, guys. Let's take a look at the BKX. This is the one I like to follow. Again, we cracked this right here, but immediately recaptured. And it's important to always take note of, like I've been saying lately, it's important you keep reminding yourself whenever you see an instrument recapture, it broke this all-time low right here, but immediately recaptured it last time it was at these levels, right? And that's why we went long. But more importantly to me, right now, the fact that we cannot move above the 10-month moving average, here, and now here, that's risky. What that tells me is that I need to be open to the possibility of this thing dropping a whole lot. Does it go back to new lows? I do not know. Is it possible? Yes, it is. Absolutely possible. All right? It is absolutely possible. And in fact, we can see that I had not seen this because the charts have so much information. But what I had not seen was that this lows right there, this lows right here, it's banging heads right there. So that might be it's obviously a resistance level. All right. So, and again, as this thing moved above 30.30 last month, July, I said we need to be long. But now I started wondering, and I started seeing the possibility of this thing eventually reversing and going back below 30. And that's going to be nasty. I mean, it's not going to be a nice month. Take a look at the NDX, another one of these instruments, struggling to move above this level here, price channel top lines. And also that what is more important to me, remember I showed you a couple of charts where when you get this break right here, this break, let's see that, this break right there, and now you're coming back and you're trying to move above this. This is a hospital door, and as you roll over, that's a fresh sell signal. You cannot afford to ignore those kinds of signals, okay? And most importantly is the fact that it closed with its RSI slightly above 50. So as it moves below 50, it's not gonna be a good month. I can guarantee you it will not be a good month. Alright, so let's move on here. Let's take a look at the BTK. Now this one is one of those that is really just comical to me, because not really comical in that sense, but this is really bearish. I mean, first and foremost, what is this spike? It shouldn't be there, right? I mean, it just came out of nowhere, number one. Alright. But what I find really interesting is the way markets play games on us. You see, this is a nice uniform U-shaped recovery, you know. But so now we are testing this. We are trying to break out above this monthly closing highs here, but close above that. But as we roll over and move below that, that's going to be a fresh sell signal. Just like when you try to break out of this level right here and could not hold that, would not stay above that level. As you moved below that level, you sold off. Bam. Right? So we need to be very cautious here in this market, very cautious. And this chart is actually very odd because, okay, so let's take this. This is late 2007. It broke this blue support line, right? So early 2007, late 2007 is right here. So that corresponds with this sell-off right there. So that's corresponds. So that was a sell signal. Now let's see what it looks like now. So we know that is where it was admitted in hospital. So twice. I mean, last year it tried to move above that. Notice the uniform action above the turquoise color, right? It's an inverted V, very uniform. Remember I said uniformity is the key in this, or in what I'm trying to say here. Uniformity. So as it struggled to move above that last and then reversed, hold on, let me take a sip of a drink here. Mouth getting dry. Okay, so as it reversed there, that was right there in mid 08. It's right, that top right there. That was a sell signal, classic. That's what I'm trying to show you. And now if we take a look at what's happening, it's come back and it's struggling to move above the turquoise color right there. So more than likely it's gonna do a number like, I'll show you how it's gonna do a number like this. A little blip above that line and drop. And that's gonna be a fresh sell signal whenever that happens, and it's gonna happen at any point early on this month, and that's gonna be a new sell signal. Remember, these are monthly charts, guys, so the implications are that the month and the many months ahead are not gonna be very nice unless the markets find support somewhere. Take a look at crude oil. We had moved above this 47.74 level here, blasted out of that all the way from 74 to 147. We've come back. We are trying to move above this level here. I haven't been able to do so far, and there's a reason why. This is a monthly chart. Why we might struggle is because as we broke this level here on the way down right there, that corresponds to this drop right there, right below 100, bam, all the way to just around 33 was when we broke that line. So that is where somebody can argue we were admitted in the intensive care, right? And so as we cannot seem to move above this. Now I'm open to the possibility, because I don't tell markets what to do, that it might move above 50 this month and put upside pressure on the market. because the energy space is a big component of the S&P 500. But until I see that, we can only go by what we see. And what I see right now, it's struggling to move above this red line, which is a hospital door. And what that suggests to me is that eventually at the end of the month, it's going to look like that. So it's going to be uniform. In other words, this is a red line, this is a red line, and it's going to be uniform rejection right there. And that's a sell signal right there. All right? Does that make sense, guys? Hope it does, because this is it's exclusive stuff and it's good stuff. And then so now let's take a look at the Kospi. Let's go to Asia. And when I take the monthly closing for the Kospi, the South Korean market, it's at now at 50%, has not closed above 50% retracement of this sell-off right here based on monthly closing. But more importantly to me, is what the RSI is trying to do this month. You can see how it's struggling, right? You can see that. And that, once achieved, is not bullish for the general market. And more importantly, actually, is what happens as the RSI drops below 50 when it does. And which it should, because eventually, remember, I'm going to bore you with this, but uniformity is key in understanding all this. If it so happens that this is correct, that it's rejected there, it's going to eventually form that kind of a U to correspond with this upward slope. So it's going to eventually go down. So in other words, this might be a multi-month, might take several months to achieve. That's what I'm trying to say. Okay, so now let's take a look at something again. Take a look at copper. Copper closed with its monthly RSI just about, I think, at 50.9 or 50 point something. It was up first trading day of August, that's why it's higher, but the copper closed very dangerously in a way. The month hasn't closed yet, but you can see it's hasn't not closed above 50% retracement of this move here. That's where we are sitting at right now. So around there, if this month turns to be negative and corresponds with it moving below 50 eventually, which also you see an area here where it could stall right there, somewhere around there. It's not yet given me a sell signal, but it's something I'm looking for ideas down the road. Take a look at the French CAC. Now here's an instrument that if I drew a line, if I draw a line, and that break right there, and then that's where it was admitted in hospital, which corresponds to somewhere around the sell-off up here, right? So this is when this line, we broke this trend right there, it's right there, and it fell very hard. It's come back all the way, and today Europe is down, and it's back testing that line right there. All right. So as it struggles and moves below, you of course know that means that's a sell signal. And lo and behold, you don't want, if the general markets eventually move back to this area, the oversold area, which is psychologically just means sentiment is so bad nobody wants to own stocks, you might see a very bare, very scary, a very fast moving, volatile market to the downside. Okay, and remember, that doesn't mean you hold for the rest of your life short. It just means you take profits whenever you see them, but you understand that there might be more down the road. So you partial profits until otherwise. The fact that the MACD is also found support, all-time low support, is okay for now because the markets have rallied. We took advantage of that as we played the long side for almost 4 months, 5 months there. But as it turns around and breaks this line, it's going to be another bearish sell signal on the long term. And that's why I'm kind of starting to a little bit pay attention to those people who say we might go back to new lows in the market, below March lows, because really the charts don't look that great. I don't know, but I'm starting to warm up to that idea, honestly. This is the Australian market. It was up 1%, so it doesn't show this in this chart overnight, but this is what it's trying to do. It's back testing this level here, which was a nice entry point to the upside, 2005. It's come all the way back and trying to hold that level again. see whether it holds. But more importantly is what it's doing with the black line and the pink line here, is if it struggles and rolls over with uniformity this month, that's going to be a fresh sell signal. Okay, now let's take a look at what is this? Just take a look at the Indian market, and the Indian market here is back at 61% retracement on the monthly charts, and that's obviously a topping area. You know, after this big sell-off, to recapture 61% is a strong move, and that generally does correspond with a pullback, and which adds on to our theory that eventually this market seems like they're going to have to pull back. And then again, you see, like, they take this blue line. This is a back testing of this blue line, and eventually this stalling here. So we really, even as I see the market here pressing positive, which is a surprise after it was down pre-market. But then again, this is what I'm saying. All these things, all they do is confuse everybody. But ultimately, the intention, as you can see, is pretty evident on the monthly, and that's why I'm not too personally, I'm not too worried about what the market is doing day to day, because I see that on the long-term picture, and we're already short, so we're gonna stay that way. But anyway, so take a look at Morgan Stanley. You know, had this huge drop from the 70s all the way to, $6, and has moved all the way to $30. So this is a huge move, right? We're talking about 6 here last year, 7, I think, and then all the way back to mid 30s or lower 30s. So a pullback is due, and it has this niceward sloping channel. As it breaks that channel, it's gonna be headed lower. Also, more importantly for me is that it's struggling. You see this, it broke down here 2007, late 2007, and so right now it's trying to, which is there, right there, and that area is where it's struggling to. In fact, it's forming some kind of a uniform double top, and this is another way it does this. So you break down, you come back, and sometimes you form a double top like that, and that's still the same thing. It's bearish, and you can see that seems like a double top. So as it reverses and heads lower, that's gonna be mucho risky. Let me see whether I'm missing anything on that chart. I know it's a long video, but you can watch it in stages. Now let's take a look at Google. Now this is what really, I'm not very good at counting at Elliott wave. Like I said, I'm not good at that. But I was wondering, I drew this last year, so I've had this chart pretty much since last year. And so we had 1, 2, 3, and I've always looked for okay, so you have 1, 2, 3, and I always wondered whether this was a 4, or could this be the 4 right now, and which means we have new lows over 5. And I don't know whether does the wave 5 take it to new lows. I think it usually does. I don't know, but I've always wondered about that. I've just always wondered about whether Google had made its 5 wave count down, just like it had a, I hope I get this straight, but 1, 2, 3 is always, see, I don't know how to do this, but I think 3 is always the longest, and this made sense that 3 was, this leg right here was big drop, and then you have 4 and then 5. I don't know, you might know this better than I do. The Elliott wave count, that's always foreign to me, and I'll let you guys figure that one out. Moving on here, let's take a look at the XHB. Same scenario here. As we moved above this green line, I said it's going to be a big month for the ultra shorts. But now what worries me is this, seems to me developing some kind of a uniform action back below that. And I'm going to, every time this thing moves back below 30.90 like there, and here corresponds with that break right there, all the way to new lows. Corresponds with this break right here, it's right here, all the way to new lows. And now you wonder if it moves back below 30.90 when it does, and if it does, whether we are going to be moving back to new lows. So I know I've been a bull for a long time, but now I'm warming up to the idea that maybe this market is not over, and those people who have been saying there's more downside, maybe they are right, maybe. And I really don't know whether we go down all the way to new lows or we retrace a whole lot. Take a look at RIM. What I just noticed about RIM is that it's so close to its 50 that if it cracks below 50, it's really gonna be not a nice time to be. Let me see what's going on here for a second. I still have to watch the market. But Dow, yeah, slightly up. The rest S&P is down. Nasdaq down a little bit. But anyway, take a look. Okay, so that's the last chart. So what I promised you I was gonna do here is if I can find the Chinese chart. Hold on, yeah, I'll try to find something here, because the Chinese market had already moved its RSI. If I can find it. If not, I think because I did all this work over the weekend. So this is just me telling you what I saw over the weekend. But I'm trying to find the Chinese. There we go. Got it. So this is the Chinese market, right? So we've moved all the way from here to here, and we've come back and we are banging heads with a 38% retracement, right? Now, if you start rolling over there, that's not good. But more importantly, fellows, friends, Romans, this is the thing. This break right here corresponds with this break right there. This break, I mean, this is big, this is important stuff. This break right here corresponds with that break of this trend right there, right? And now we've come all the way back, been in hospital all the way back, recuperating, and now we are here. See where we are stalling? This, to me, is a fresh sell signal in the world market. You cannot afford not to be short. Okay? Now, all right? Now, let's take a look at two more charts. And these are going to include the S&P 500 and the Dow. So we can see, let me play around with price targets, even though, like I always say, price targets are silly, because nobody really knows, and market eventually will decide when it's going to turn. And your ideas as trying to figure out where the market is going is not have price targets which are set, but to be ready to notice when things start rolling over. Okay, so this is a Dow. It's not the best looking chart, I have to admit, but it's gonna work. Okay, now first and foremost, I'm sure, maybe not, but hold on here, let my tool load here. Okay, so now this is the Dow. More important, let's look at the RSI. So once we broke through this break right here is when I said, guys, last September I told you the market was gonna crash. And it's not that because I'm the smartest guy on earth, but it's because I saw this break right there. Okay, I saw it. I saw we were gonna break this right there, and that to me was time to get out. And that, my friend, corresponds with right there. So all this sell-off right here is all predicated upon that. So now what we've done, we've come back. And my issue with this market is if it rolls over right there, this break right there, that's a fresh sell signal. I don't care what markets do today, but if that's what it's gonna do, it's gonna be lights out. Okay? And I don't know. So now let's play around with price targets as promised. And the price target I'm looking for the Dow actually surprised me that I actually even thought that was put. First and foremost, we have to accept that this right here is 38% retracement, where we are right now. 38% retracement. Okay, number one. So now let's take that and take what. So I think it's going to be a severe pullback. So if that be the case, then the Dow goes to 7,500. Okay. That's, I would say, my worst case scenario is we eventually come and break this upward sloping line, which has been support for the last 30 years. We break that and we see new lows in this market. Okay, this is where we found support. But conservatively, I say the Dow at least is going in the 8,000s. That's my bet. 7,500 would be 61% retracement of this high from here. So I would say I don't know, but it's going somewhere in this region here, 75, 800 on the Dow. That's possible, all right? So let's leave that at that. Let's take a look at the S&P 500, because that's the benchmark for pretty much everybody. And I know the video is long, but you know, hey, it's a serious business here. We have to decide what the market is gonna do. Okay, so now I'll have one more chart because I see SSG is up. I want to see what the SMH is doing on a monthly chart. Okay, so we have S&P again. Notice this move was about 38% retracement, right, from here to here, from these highs to these lows, right? That's where we are. It's a tricky point for the market. And then now, if we roll over from there, then that puts the S&P. I know you can't see it, but I'll try and see that S&P at 800, right? S&P 61% retracement of this move would be around 800, about 850. Somewhere around there. Let's say 850 would be a price target conservatively, or lo and behold, we break those levels and we make either retest this low here or we break to new lows. And that's entirely very possible. Now, one more chart before I move on here, let you guys go on with your day. And I appreciate your business a lot. Is what's going on here. You see, it's not yet negative for the month, the SMH. It is not yet negative for the month. See whether I can, sorry about that. See whether I can move that a little bit. How do I move this? Okay, there we go. There's SMH right there. It's not yet negative for the month, but as it slowly starts rolling over and moves back below 50, when it does, that's not going to be a good sign for the general market. We'll see how it plays out. But this was an exclusive video for you guys. Appreciate is a way of me showing my appreciation for letting me guide you through very tricky markets, and I wanted you guys to understand what the big picture was as far as I see it. Eric Muathe with Muathe.com. Peace and blessings.